not looking like a good day in the markets. When the financials are all down like that, as you just saw, that pretty much means that we are headed in for some pretty strong selling into the markets. We are just now, 15 minutes away from the opening bell. See how we're going to watch, of course, how all the markets are reacting to this report that came in. The August unemployment report came in pretty much no change in hiring, no hiring at all. In fact, the unemployment rate staying at 9.1%. Dominic and John are staying with me to cover the jobs report. But now I want to bring in Dean Maki. He's the chief economist at Barclays, a Bloomberg best on the economy. And Dean, you made the point before that that this market, what's happening in this market is that we're seeing less firing, but we're also not seeing hiring right now. So to sum it all up, what does it mean that the Fed is going to have to do? Because it seems like it all now relies on what Bernanke is going to do with this.
And we think this report is something that does point to Fed action in September. We think it's unlikely the Fed will sit on hold and not do anything in September, given this kind of weakness. We don't think that they're quite ready to do a full-blown QE3 at this point. Rather, most likely they'll do some sort of operation to lengthen the maturity of the Fed's holdings.
But is that going to do much?
By itself, it doesn't do a lot.
So then why? Why do it then, right?
I think the reason is to at least give people the sense that the Fed is in motion, they're paying attention, they are moving, they're making modest policy changes, and importantly that they will do more if necessary.
Well, Betty, to that point, in trading this morning, what we did see was the huge sell-off. Then people did take a pause, almost as if they thought, okay, now it's time to wait for what could happen next. We bounced up, but we've gotten back down towards the lows of the session, which suggests that while people are thinking that might be a possibility, Dom, that
it's
they're
not
really
just
not
that.
sure.
Remember, we heard Nouriel Roubini talking earlier today from Italy saying that, maybe this is a bad news is good and a good news is bad situation. Bad news means, hey, Fed is going to step in with more easing, kind of like what you're saying, Dean. But what is the likelihood that any kind of action, aside from, the Fed stepping in there, is it now all about fiscal side? Does it mean that President Obama and Congress have to do something about this for the monetary stimulus from the Fed to make any sense whatsoever here?
I think the fiscal side would probably have more effect now than what the Fed can do. But it doesn't look at this point like we're going to see major fiscal stimulus of any sort coming through. So the options do appear somewhat limited on that front.
Right. Well, how can we have any fiscal stimulus coming through right now, Dean, when, we can't even get Obama and Boehner to agree on a date on a speech to talk about creating jobs?
I do think the political gridlock in Washington is a significant barrier to significant action.
What's going to happen in the markets? What do you think? What does this mean then? Does this mean that lacking Fed action, that equities are headed back on their way down, that this volatility that we saw in the month of August is here to stay, Dean?
Well, markets may continue to be volatile. We think, though, the Fed will be in motion. That should be something that helps the equity market, all else equal. And we don't think that the economy is right now heading into full-blown recession. So to the extent those fears are there, we think as the next few months of data print, those fears will start to be relieved. So there's some modest positives on the influences on the market we might point to.
Well, Betty, and look, we know that there are a lot of people that are away right now, even though this is such an important number. In fact, just talking to bond traders this morning, they said, yeah, you're seeing people gobble up bonds, but at the same time, there isn't a lot of trader activity today.
No, the volume's been scarce now. So I guess the question then we have to ask ourselves is, are traders going to make any kind of move? And Dean, maybe this is a great question for you. Is this an environment right now where traders are better off maybe sitting on the sidelines as opposed to trying to dip their toes in the market?
Well, I don't really make trade recommendations, but I would say that this most likely isn't a time to get – markets are already priced for a lot of risks. We wouldn't think this is a time that one wants to become even more cautious.
Okay, Dean, thank you. Appreciate it. Bloomberg best and Barclays chief U.S. economist Dean Maki on the jobs report.